Every exit story online skips the boring part, the years you're still clocking in. You picture leaving your 9 to 5 the moment you have a plan, but the truth is, your current job might be the single best resource you'll ever have for building your exit. To take advantage of it, you just have to stop seeing it as a cage and start seeing it as a launch pad. If you're new to the channel, hi, I'm Kit. I'm a parent, a household manager, and an accounting manager who spent almost 20 years inside the corporate machine managing multinational millions. You are now looking at my digital twin, an avatar I use to create my videos while I navigate my own exit. What 20 years in corporate finance taught me is something most people miss. A paycheck is only one of the assets your employer hands you. There's free education, senior mentorship, professional networks, and tax-advantaged accounts sitting inside your benefits package, mostly unused. The goal today isn't quitting faster. It's extracting everything of value before you go, and you will thank yourself for having taken the time to do so, at times when your most valuable lessons will play a key role in your future success. In the book, So Good They Can't Ignore You, Cal Newport argues that rare, valuable skills, what he calls career capital, are what actually buy you freedom, not passion alone. Your employer is, whether they intend to or not, subsidizing the exact skill building that increases your career capital. Every project you deliver successfully, every technical or even soft skills course, every stretch assignment is compounding interest you haven't cashed in yet. So let's map it out. Inside almost every corporate job, there are 4 hidden assets sitting next to your salary: the experience of the people around you, formal learning and training budgets, your professional network, and structured financial benefits like pensions. Most employees walk past all 4 every single day. Let's break down how to actually use them. Asset 1 is borrowed experience. Somewhere in your company is a person who has already solved the exact problem you're about to face: a tricky negotiation, a messy project, a career pivot. That knowledge costs them years. It costs you a 15-minute conversation. Treat senior colleagues like a free consulting firm and start asking better questions. Set up 1 intentional coffee chat a month with someone outside your immediate team. Ask what they do differently, what mistake taught them the most, what they wish someone told them earlier. You're not networking for a job. You're mining institutional knowledge that no course will ever teach you for the price of a coffee. Asset 2. Most companies quietly budget thousands of dollars per employee every year for courses, certifications, and conferences, and most of that budget goes unclaimed. That's a benefit sitting on the table. Whether it's a data certification, a leadership program, or public speaking training, you're being offered free skill upgrades that directly increase what you can charge later. The trick is choosing training that serves 2 masters. It helps you in your current role, and it builds a skill you can monetize independently. Learn the software your freelance clients will eventually need. Get the certification that also strengthens your resume outside the company. Let your employer fund the exact skills your exit plan requires. Asset 3 is your network. And in Never Eat Alone, Keith Ferrazzi makes the case that real networking isn't transactional. It's about consistently, generously helping people before you need anything back. Every cross-department project, every client call, every internal committee is quietly building a list of people who will vouch for you, refer you, or hire you later. Start treating internal visibility as an asset, not office politics. Volunteer for the cross-functional project. Stay in touch with the vendor who was easy to work with. Keep a simple list of people you've helped and people who've helped you. When you eventually launch something, this list becomes your first 10 clients or your first 100 subscribers. Asset 4 is everything else buried in your benefits portal: health savings accounts, wellness stipends, legal and financial planning services, equity or stock purchase plans, even free software licenses. Most of it goes unused simply because nobody reads the fine print. A single afternoon reviewing your full benefits package can uncover thousands of dollars you're currently leaving unclaimed. Stack these 4 assets together: borrowed experience, funded training, an active network, and unused perks. And you're not just surviving your 9 to 5. You're quietly building the exact toolkit your exit requires on someone else's budget. But there's one more asset most employees ignore completely, and it's sitting directly inside your paycheck. As an employee, you have access to something self-employed people spend years trying to replicate: the ability to direct part of your gross salary, before tax, straight into a pension or retirement account. That money is invested before the government takes its cut, which means every dollar you defer works harder than a dollar you'd invest after tax. If your employer offers any matching contribution, that's an immediate guaranteed return before your investments even grow. Money you cannot replicate once you leave. Even a modest increase to your pension contribution, made now while you're earning a steady salary, compounds quietly in the background while your attention stays on building income outside the company. Think of your pension as the base layer of your exit runway, and your outside income as the accelerant. One grows automatically through payroll deductions and tax efficiency. The other grows through the deliberate hours you invest after work. Together, they're working toward the same number, the point where your outside income finally covers your living costs. This weekend, check your current pension contribution percentage and see how far it is from your plan's maximum or your employer match cap. Even a 2 or 3% increase, deducted automatically from your gross pay, barely touches your monthly budget, but meaningfully extends your future runway, with zero extra willpower required. Here's the actual goal underneath all of this: using your job's assets to grow outside income streams until they can eventually replace your salary. That's the number that matters. Not a vague dream of quitting, but a specific monthly figure your consulting work, your content, or your small business needs to hit before your exit becomes math instead of hope. To recap, borrow experience from the people around you, claim the training budget that's already yours, treat your network as a long-term asset, and direct part of your gross salary into your pension while the tax advantage is still available to you. None of this requires quitting today. It just requires paying attention to what your job already offers. This week, do 3 things. Book 1 coffee chat with someone senior in your company, but not necessarily your line of service. Check your unused training budget and enroll for a new course, and review your pension contribution percentage. None of it takes more than an hour combined, and all of it moves your exit timeline forward while you're still collecting a paycheck. Meanwhile, thank you so much for watching. If you liked this video and you resonate with my strategy, consider subscribing. It would mean the world to me. If you want the spreadsheet I use to track pension contributions alongside outside income growth, it's linked in the description below. Comment with which of these 4 assets you're most underusing and which seems the most interesting to you, and I'll see you on the runway.